Be Wealthy and Smart, episode 825.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about U.S. housing trends, because there's some really interesting things going on in the housing market here in the United States. And I really want to talk about it with you because I don't think these trends are temporary and I don't think they're just due to COVID. So we're going to talk about where people are moving to and why. And I'm going to share with you a combination of two articles that share some really interesting information. But first, I want to say it was very difficult to get updated information on the number of homes in forbearance. Most of the numbers were still dated back in October, and here we are in mid-January 2021. So there's not a lot of updated reporting on the statistics. Maybe if you're in the industry, you might have access to that, but I would just say, in general, doing searches, it was difficult to find a particular number I was looking for. But the last numbers that we saw in terms of how many homes were in forbearance were about 25%. Of all mortgages in the United States. So whether that has trended up or down, I can't give you a more current number than that number from October. So having said that, let's share some interesting news with you. And this article comes to us from CNBC and was written by Diana Olick. And it says, home prices are rising across the nation, but the COVID pandemic is turning the usual geographical trends on their heads. Home values have historically risen most sharply in large cities on the coast, where supply is larger and demand is stronger. That is no longer the case. Smaller metropolitan areas like Pittsburgh, Cleveland, Cincinnati, Indianapolis, Kansas City, Boise, Austin, and Memphis are seeing some of the strongest price gains in the nation now, according to the Federal Housing Finance Agency. Prices in those cities are now at least 10% higher than with a year earlier. These have been all historically more affordable markets and markets that generally have more inventory of homes available for sale. That makes the suddenly strong price growth in the middle of the country that much more striking. Much of it is likely to do with the new ability to work from anywhere due to the coronavirus. People are leaving larger, more expensive metropolitan markets and heading to less expensive markets where they can get more space and land for their money. Although the full history of the pandemic's impact on housing prices is yet to be written, the data from the last several months are consistent with the view that COVID has encouraged potential buyers to move from urban apartments to suburban homes, said Craig Lazzara, managing director at S&P Dow Jones Indices. Nationally, home prices rose a remarkable 8.4% in October from a year earlier on the S&P Case-Shiller Index. That's up from a 7% gain just the month before and is the largest one-month move in over a decade. And by the way, I just want to point out, they're quoting October numbers as well, and this article was published on January 4th, 2021. Traditionally, more affordable markets are becoming less affordable as prices rise faster. At the end of 2020, the median price of homes in just over half the counties in the nation, 55%, was considered less affordable to the average wage earner than they have been historically, according to Atom Data Solutions. That is a significantly larger share than a year ago, pre-pandemic. These price gains are completely offsetting the benefit of lower mortgage rates, and it takes even more to come up with a down payment, which is a big deal for the first-time buyer, less so for others, said Peter Bookvar, managing director with Bleakley Advisory Group. Another of the Fed's unintended consequence of hurting those that are least able to afford it. Mortgage rates set more than a dozen record lows in 2020, fueling the demand for housing. They also fanned prices higher by giving buyers more purchasing power. Rates are not expected to rise meaningfully this year, but their benefit is already far less than it was as prices keep rising. These factors appear likely to remain in place in the near term, and an incrementally improving economy should encourage more buyers to enter the market, said Matthew Speakman, an economist with Zillow. Taken together, this torrid pace of home price appreciation appears primed to continue well into 2021. And that's the end of that article. Well, again, it's a bit misleading because we have 25% of homes in forbearance. Are those homes eventually going to come onto the market as foreclosures? And if so, that's going to dramatically increase the supply of homes available, which theoretically would drop housing prices, although that would probably be more along the coast and in more urban centers. But still, the inventory is very small, and that's why housing prices have gone up, in addition to interest rates being so low and having multiple new record low interest rates last year. So it's not a normal market. The supply is constricted, the demand is increased because of COVID. So of course, we have prices being forced higher and multiple offers being given on homes. People are moving more out into rural areas. And recently I was reading an article about Tennessee being the hottest market in the United States. Tennessee. Because housing prices are very reasonable, you can get some extra land, and if you can work from anywhere, why not live in Tennessee? This other article was on Yahoo Finance, and it was written by Melody Hom, and it's talking about middle-class homeowners getting priced out of the market. It says the number of homes for sale reached an all-time low in December as buyers remained active and eager to buy even during the holiday season. National inventory declined by 39.6% over the last year and fell below 700,000 for the first time, according to a new report from Realtor.com. The U.S. housing market has been a consistent bright spot during the coronavirus crisis, buoying the economy, which in December lost jobs, 140,000 of them, for the first time since April. Even during such uncertain times, mortgage rates remained at historically low levels, and many Americans are seeking more space as their homes have transformed into offices and schools overnight. But given the low inventory and the quick turnaround of homes, middle-class Americans are finding homeownership more inaccessible than ever, according to Grant Cardone, a real estate investor who manages a $1.4 billion portfolio of multifamily properties and also stars in Discovery Network's reality series Undercover Billionaire. The middle class are going to get priced out permanently. The Great Divide will get wider. Wealthy people are picking up second and third homes like most people buy Skittles, or the way we were buying toilet paper back in March. The average person is not able to grab a house today. After the pandemic, the banks went to 20% down. Now they're doing double and triple checks to see if your future employment is stable, he said during an interview with Yahoo Finance Live on Friday. Homes are selling quickly in this environment, spending an average of 66 days on the market as of December, 13 fewer days on average than in 2019, according to Realtor.com. U.S. home price growth surged in October to levels not seen in 6 years, Yahoo Finance's Amanda Fung reported. It's going to get more and more difficult for people to buy homes in the lowest interest rate environment we've ever had. The middle class will not be able to take advantage of this. This validates the concept which I've been pushing. Cash is trash and the wealthy are turning cash into real assets, he added. Among other trends, the exodus out of expensive cities like San Francisco to Colorado, Texas, and Florida is one that's unlikely to reverse course after the pandemic, says Cardone. Tech icons like Elon Musk, Alex Karp, and Larry Ellison are driving the new normal and diluting the value proposition of Silicon Valley. Cardone moved his business from Southern California to Miami in February, contending in a blog post that the Golden State made doing business there too burdensome. Migration, it's no temporary thing, Cardone told Yahoo Finance. This is going to happen. End of article. I do agree with Grant that the migration is here to stay. As long as people have flexibility about where they can live, I think they want to have more space, more house. I mean, if you are going to have to tutor your children at home, and if you are going to have to work from home, well, you might need a new home to reconfigure how you live. And lots of people are certainly spending money on remodeling and doing things to refit their house to match their new lifestyle. So I get being able to move and downsize from an expensive market like California, New York, New Jersey to a less expensive market like Tennessee, Florida, or Texas, and more tax-friendly states to boot. But I also understand that there is this big block of homes stuck in forbearance. And that, I think, is really the key to the future housing prices. If those do go into foreclosure, then we will have a dramatic increase in supply, and that is bound to bring housing prices down. However, should that be some form of a combination, or should there be some kind of a new deal, that can change things dramatically. So we'll just have to keep watching the trends and see what happens. What I would say is this remains a great time to sell. If you have thought about selling your home, this is the time you can get multiple offers. You might even get an offer where the buyer decides to waive the inspection. So you might not even have to really fix up your home before selling it. So if it's in poor repair, in a lot of markets, that doesn't matter anymore. People just want a home and they're willing to pay anything to get into the house that they want. So it's a great time to sell your home. Certainly interest rates are low for buying a home, but a lot could change this year, and we'll have to see what happens to the supply of homes, because ultimately that is what's going to drive the prices, is how many homes are available, because that has really been what has kept the market high during this whole COVID time, is that there is such low inventory. Should that change, that could dramatically change pricing and markets all around the country. So we'll keep an eye peeled, we'll keep on reporting into you and letting you know how things are going. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available so you never miss one of them. And right now we have our holiday giveaway happening where I'm giving away 25 prizes. 10 of my You're Already a Wealth Heiress books signed by me, and that book is on the list of all-time best wealth books by Book Authority. You can win 10 of my Wealthy Mindset Blueprint audio sets valued at $197, and 5 people will win one-on-one wealth mentoring sessions with me. All you need to do is leave a podcast review on iTunes for Be Wealthy and Smart. That will get your name in the drawing one time. And if you read the Wealth Heiress book and leave a book review on Amazon, that will get your name in the drawing 2 times. We're taking reviews given since the middle of December when we started the giveaway. And right now, everybody who's left a review is bound to win something. So your chances of winning are really great. I encourage you to leave a review. I want to thank everybody who has left a review so far. They are phenomenal and spectacular, and you guys have been just amazing with some of the things you've told me and said, and I just want to say thank you to everyone who's left a review and to everyone who listens to the podcast. You guys are all phenomenal. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.